Welcome back, guys. So, welcome back to another weekly price action review. Now, admittedly, truth be told, transparency, my charts are already annotated, and the reason being and it's Sunday, and I actually did the majority of this yesterday, and I had the intention of recording it, but because it was hard pressed, Saturday being a family day, um, kids, we had a full day sort of things booked, and time was very limited. And typically, when I record and do it at the same time, it takes a lot longer, which I wasn't really afforded that time to do it. So I went ahead and did the markups and stuff, and now I'm going to record for you guys the observations and the takeaways from this week's past price action. So let's begin. Um, just as an overview, the economic calendar, and for those, just to see it, that's what the economic calendar was for the week. So as we can see, dollar news on Monday, Tuesday, Wednesday, Thursday, and Friday. We've obviously NFP on Friday, so we know that primarily the main move is going to occur between Monday, Tuesday, and Wednesday. Um, so for me, I'm looking at the primary move, obviously, the large expansion and so forth to occur on Friday. That doesn't necessarily mean that that's what's going to set the high and low of the week, but we know that there is going to be explosive volatility on Friday. This is a week for me because typically, if you think of the opening week of a weekly candle, the open, low, high, close, or whichever way you want to view it, this week I always typically associate with choppy to consolidated price action. Okay. And I think you've got to pick your shots this week and not have overarching expectations in terms of where price is likely to go because of the nature that this week and the profile of this week and what it can present. So anyway, let's get straight into this. So that was the economic calendar. So for me personally, the key heading into the week in alignment with the economic calendar was that we had SMT at the highs with NQ. Now, this is the weekly chart. So the large SMT at the highs, for me, I'm looking at it more as a potential directional move. So, I noted the market traded above this old, you can just about see it, all-time highs, right? And then we also have this, what would have been this previous week here, traded above both in this week, okay? Right? And then we saw this SMT. So that's supporting the idea of potential lower prices. But again, I'm not using this SMT to frame a trade. But what it did do was support the idea, bearing in mind that we traded above these two liquidity pools, of an external to internal range move. Therefore, my initial drawn liquidity was the BISI weekly. Okay, that's how I was looking at the market in this week. Now, does that mean I'm only going to trade potential shorts and so on and so forth? No, it doesn't. This doesn't mean that's what I'm going to look for. Can look for longs, but fundamentally, the narrative of the chart was trade down to here, and then once it gets here, let's look for further information to see if it's supporting a continuation or whether there's the chance that of a reversal to target these highs again. So, as we can see, the market traded down into CE. Can see that? Yeah. Before it rejected that key price level and traded back into this weekly range. So obviously we ended up with an indecision candle there. So as I said, I do not utilize this SMT as a trade, but it's just rather clues in terms of, does it support the potential narrative of lower prices to here. However, I would look to pair this or align it with some form of lower time frame, so a daily or a 4-hourly SMT at the highs to support then the lower prices. That's how I'd look at that. Okay, so that's the weekly chart. Let's drop down to the daily. Excuse me. Take a little bit of coffee. Okay, so as detailed on the weekly time frame, I was anticipating lower prices to this weekly BISI. Okay, and then from here we would seek further information as to whether the market would want to go and attack these relative equal highs, which, as we can see from Friday, there is a clear indication that that could well be the case, right? So, excuse me. So we'll analyze this when we get to the 4-hour, but ultimately the market traded down into the BISI, and then we saw higher prices. Now, daily IOF, institutional order flow, is, in my opinion, to the upside, right? So this retracement, as far as I'm aware or concerned, it's plausible to assume that this retracement is just to engineer more liquidity at the highs for the market to then find support at the BISI, target these highs. And there'll be rationale for that when we drop down to the 4-hour time frame. Excuse me. Another key indicator for me was that we've got the BISI, but we see how the bodies are respecting the upper level. Traded down into it, rejected. Traded down in, rejected. Traded down in, rejected, and then traded away. The rejections. Now, don't get me wrong. I needed to see supporting factors at the lows here, which we did, to support the idea of potential higher prices. But the fact that the bodies of the candles were not closing, apart from here, you could say, inside of the BISI, and certainly were not closing below CE, supported the idea that we could be seeing accumulation of sell stops to engineer price to provide the fuel price to trade higher, to order pair at the highs. Now, naturally, I wanted to have some scenarios in play. So, if price was going to violate this BISI weekly, then my anticipation would have been price to continue to the discount of this daily range, and then that would have brought into focus this initial BISI daily. Then you've got another one here, but this one, and as you can see, the lower half being within a discount market. So this would have been the next draw, as far as I'm concerned. Yes, we do have a old low here. I haven't marked that up because my view would be, at this point, we would be seeking a discount of the daily range, and this would have been the draw going forward. So not much to annotate here on the daily chart. Taking most of the annotations from the weekly and transposing it down. So that's my outlook for the daily. We'll get down into the 4-hour now, where I think, more information presented. Right, so let's really extend this out. Let me just do this just to clean up our 4-hour chart. Oh, now the fans are going. The fans are going. Right, let's just get this nice and clear. There we go. Okay, so heading into the day, to the 4-hourly chart. So as referenced from the daily time frame commentary, I was initially seeking lower prices to the BISI weekly, which is this area here. Okay, so I wanted to see a cracking correlation at the highs to support the idea of lower prices following the higher time frame SMT that we had annotated on the weekly chart. Okay, that was just purely for reference. Now I want to see something to essentially confirm that we could see an initial move lower. Okay. Excuse me. So I've annotated here the why is that there? Should be there. The weekly opening price and the true week open price. Now it's the true week open that I use, but I like to put both on the charts just to see where they are in relation, proximity to each other, in relation to what I would classify as true premium and discount. So, following the confirmation of the true week open here, in addition to the weekly opening price, so we can see the market traded higher, purging the buy stops above this previous day's high, Q5 from Friday, where it formed SMT with NQ. Okay, so it's engaged the buy stops. Only a small prod above. So that gives me the indication that we're going back up there. Already that gives me the indication that we will revisit that level. Possibly next week. Okay. I could be wrong. Would have to see what signatures the market presents, but that's what I'd be looking at going into one of the factors I'd be looking at going into next week. Not cast in stone. Okay, so this occurred during the London session or sort of the Asia session, but we'll get into that when we get down into the hourly time frame. Okay, the market then displaced lower, as we can see. So the market displaced lower aggressively, as we can see this huge displacement candle here. Okay, and ultimately traded down into the BISI weekly, which was the higher time frame objective. Okay, so now the market trading below the true week open. For me, this supports the idea of high probability longs. It doesn't mean that it's cast in stone. We just look for longs. No, if a signature or a model forms, that is your model. That's going to support. For me, that would support a long position. Okay, but there are other factors that I'll take into consideration as to whether longs are not actually in play. But that's not necessarily for this session. Okay, so then the market forms SMT with NQ at the lows here inside of the BISI weekly. After purging the previous day's low Q2 Let's just drop this out for the time being, just to keep it nice and clean. There we go. Setting the stage for higher prices. So we've purged here, setting the stage for higher prices, as we can see here. But it failed to take out this key level, which was an important one. I don't know why I haven't marked it up. I think it's because of I didn't want this to overlap with the weekly opening price, but it's fine. Let's okay, let's put that in there. Okay. So it didn't quite trade up to this level, but NQ did. NQ was the leader in this move higher. Okay. So then I noted this SMT, this SMT with NQ here. Where obviously NQ created the higher high, this created the lower high. But it's important to note that for me, this was low probability. Now, one, because we're trading below the true week open, but that's not necessarily just that. But it did not occur for me inside of this CB. Now, NQ did trade into here. ES didn't. So for me, it was just low probability. Could I have taken a position here? Yes, I have a model to support that, but for me, it was low probability. I wasn't looking to do that, but nonetheless, that occurred. Okay, prices that the market traded lower, but as you can see, we're in a consolidation here. So we've got to be very methodical with the moves that we look to undertake and the framing of the trade. The market then repriced lower, but failed to purge the liquidity of the previous SMT. So you've got this SMT here. There's a lot of liquidity resting below here. The market traded down, failed to take this out. So automatically, this high, I don't know why. Maybe it's because it's going to overlap with the hourly, but that's fine, that's fine. Let's just do that. This high becomes a target for liquidity. We've got a failure swing here, so this high is a target. Okay, so the market purged this liquidity level. Now, the reason why this one's not marked up is because I've left it as an hourly level when we get into the hourly chart. And that could probably be the same for this one here as well. But that's neither here or there. It's fine. So the market purged the liquidity below here, failed to purge the liquidity below this previous day's low, setting the framework for SMT with YM. ES and NQ both formed higher lows, and this set the stage for higher prices, and ultimately this was the catalyst for higher prices all the way through, including NFP. Okay, so as we can see, the market, as I said, repriced higher. NFP is one of these candles here, this candle here, I believe, and continue to reprice higher into the CB, where we market ultimately closed for the week. Okay, so let's move down. Now you can see is this the NFP? Yeah, so NFP is part of this candle here. The market traded down into this order block here, which is it a propulsion block? Yeah, it is a propulsion block. Traded into there, and then we had the move higher. that wouldn't be something I'd frame position slightly differently, but people who use order blocks, they would utilize that, and that potentially would be a catalyst for a trade higher. Not for me, but anyway. So moving on to the hourly. Let's get things in order. Tuesday. There we go. I think that will do. Okay, so a lot going on here. I'm going to try and break this down as concisely as I can. Usually when I annotate the markets as we go along, it's a lot easier to see what's occurring. But hopefully you still get the picture with things. Okay, so let's just start from Monday. Not a lot happened. It's not a day that I typically trade, but not a lot happened. Markets essentially consolidated, formed the low in New York, the AM session, traded higher, purged the liquidity above. You know what? Let's put some liquidity pools in just to make this a little bit clearer for the eye. Okay, for completeness. Oh, there we go. Perfect. Okay. So, market traded down. Yes, we do have the London low here as well. Traded down, forms the low, comes up, purges the buy side above London high, trades back down. So, a real seek and destroy profile here. Purges the liquidity below the New York AM session, forms the low of the day, and then we have this reprice higher. And as we head into Asia, the market trades higher and forms the high time frame SMT here. Okay, so heading into this session, the market trades down following the SMT, confirms this hourly order block here. Draw that out in time for. Okay, now again, look at where we are. We're above the true week open. Heading into Tuesday, market trades up, forms the London high, forms the London low. This tight range. We then see the market trade up, purge London after this high time frame SMT. Trades down. This is a model. It's a model of mine, quantum, and then rejects heavily. Okay, which ultimately forms the low of this day. We obviously have the high impact news driver. So now we're below true week open, weekly open price. Market trades back up into this H4 SIBI. Trades up into this H4 SIBI, and then essentially trades down before consolidating for the rest of the day to close that day. Okay, so key liquidity pools here that were added, obviously the low time frame SMT here, the London high, London low. That's it. Really simple stuff. All the stuff that we do on a week on week basis, it's the same things. Rinse, repeat. It's your model. You're capturing your model. The key elements of your model. That's what you're capturing. For me, yes, this is reference to London high. The reality is it's a H1 liquidity pool. That's what my model looks for. Therefore, that's what I'm annotating. Now, if you make refinements to your model, again, refinements are made by doing this process. This process and the daily price action journal, those two are super, super important to your development. That's where you are going to find the refinements, you're going to find the changes, you're going to find the subtractions from your model. That's why it's super important. And you're repeating your model day in, day out. If your model doesn't present, then annotate the market when you're doing, for instance, a daily price action review. And yes, I will be doing those soon on the channel in terms of how I tend to do them. But just again, if your model doesn't present, just provide commentary as a top down. You don't necessarily need to go down into the entry time frames because there wasn't an entry for you, but certainly down to the hourly to analyze what happened. That's going to give you a picture and help you frame when you should and should not be in the market in terms as it pertains to your model. But it's always important to make sure that you are referencing the key elements of your model during this process. It's super important and super beneficial. Okay, so moving on, head into Wednesday. Yes, we head. Oh, I do apologise. Thought my phone was on silent. Let me just turn that off. There we go. Perfect. Okay. So as we can see, the market opened, repriced lower below the true day open here. Okay. And then we have this consolidation. Now, yes, we could mark up the SSL, the London lows here, which the market trades below after that's not bleeding London. There we go. That's what we want there. Because technically the London high, you could argue, is this candle here. So then forms this H1 liquidity pool. Market trades down, purges low of London during the New York session, trades higher. We have this low time frame SMT. The market then trades lower. This is a great indicator for me that a potential model could form once I see this, prior to the confirmation of this. Market trades down, purges previous day's low, SMT, purging, taking out a daily level. However, we do also have this. Okay. Takes out the hour liquidity pool. In concert with the daily, we get the rejection. Right. The market reprices higher. Now, near term draw, this high. But ultimately looking for this, which NQ took out. Okay. Market trades higher following the news. And then forms the high of the day, and then it essentially consolidates, trades back into the range for the remainder of the day. Okay. So again, I've got the key liquidity pools. In this instance here, there's no need for me to have sort of imbalances and stuff, because there isn't really any that are of notoriety for me, that are of importance. So I haven't marked them up. But as soon as there is one, where typically, so the question would be, well, what imbalances do you look for? Well, primarily where some form of accumulation of orders or imbalances that have been repriced and rebalanced, where the market has accumulated of some sort or manipulated and then driven price to a certain destination. They're the ones that I primarily look for, but also at the same time unfilled BPRs as a key point of rejection. So there are a number of them. So heading into Thursday, the market opened setting the BSL London, and then it traded lower. Okay, so it did that just above the true day open, then it traded lower. The market fell to purge previous day's low, Q3. Now it is a little bit sort of down here, a bit, overlapping, but you can kind of get the picture. And then the market repriced higher, purging the high of London, forming this BSL H1, but also where we had SMT with YM. Okay. Market then ultimately went to reprice lower. And this kind of tipped its hat that we could see something at the lows. However, what happened? News. Market trades higher, forms SMT at the highs before ultimately trading lower. Now this is really choppy. This is real consolidated choppy price action, but the market did trade lower, right? Took out a, as we can see here, but we also have London there, so that's probably why I didn't bother marking this level here. But nonetheless, let's, let's do this now, just so I don't have to do this again. Okay. So once it traded down, purged this London low. Now this London low is a H4. Okay. So the market purged the old low H4 here, which is also the SSL London, right? Setting the stage for my model at the lows before the market then repriced higher. We had, so this purge didn't purge the previous day's low, created SMT, created the higher low with YM, okay? And then there was also, difficult to see, but where we overlap in terms of SMTs, we've got this low time frame SMT at the lows as well. So we have now double, and that set the stage for the market to gradually reprice higher. This occurred late in the day, repriced higher, ultimately would target this high here and beyond. Okay, and then we head into Friday, where the market opened, traded below the previous day, the true day open, formed the SSL London, and then it repriced higher before NFP aggressively reprices higher. Yep. And then we see the market retrace lower, back into the range. Down into the order block, there would be a larger order block here. I think we noticed that there was a H4 order block, which the market traded down to. Now, for me to form a trade idea here on NFP, I would have needed to see this, ideally take out the London lows. If we took out the London lows and we created low time frame SMT down here, that would have been the catalyst for me to take a trade higher. Didn't do that. All members respected this London low. Therefore, we had symmetry in the market. There was no trade for me to take any longs, so the market repriced higher, taking out this high here for completeness. Like so. Okay, and closed for the remainder of the week. So that's what happened. So what are the key things that I've plotted on here? Where the news drivers are, key liquidity pools from a daily, 4 hourly, and an hourly top down of importance. Key PDRAs that I look for, which are predominantly liquidity pools and imbalances and order blocks when it comes to sort of entry activation. Okay, so that's my breakdown of the week. Now make sure as you've done this, you've noted down any key takeaways, any key observations you've noticed. Now you're taking a holistical view of the markets. Were there any things, views and impressions that you had at the time that actually now you've taken a step back, you're looking at it again and think, okay, right, I can see why I thought what I thought. However, the market did X, Y, and Z, and that's why it presented this. Things that you can take away. And always remember that the things that you take away, it's not about just time stamping them in an entry and then moving forward. It's about, okay, I'm going to document this and I'm going to go back through previous weeks to find examples of this behavior to support or negate your theory. Super important. That's how, again, we find improvements. Okay, so make sure you document all of that down. And it's important to ensure that you do this on a week-on-week basis. Put your takeaways in. I'm going to take a picture of this because I have updated this chart slightly. So we're just going to pop this one in. Okay. So guys, that is that. Yes, it's, wordy and stuff like that, but it's important. It's important for you to be able to tap into my mind of how I do things, and what you'll ultimately be able to do is create the way you do it yourself. The things that are important to you may not be important to me, and vice versa. So anyway, I hope you've taken something away from this. I hope, if nothing else, you've understood the importance of carrying out this exercise every weekend. If you have aspirations of being the best trader you can be, this is an important task that must be done every weekend without fail, and you need to learn to fall in love with this process. Okay, even at days when it becomes hard, tiring, you summon up the energy to ensure that this is done. Okay. I will share at some point in time the questions that I ask myself in order to complete my weekly ASR. That will come, because that is another weekly task which complements this. But hopefully you've taken away something from this, and I will catch you guys next week for the next one. Take it easy.